Good morning and welcome everybody to a new week, a new pre-market rundown session. Let's see, we got some kind of contrast going with the backlights, but whatever, we keep it pushing. Welcome, yes, to the pre-market rundown for March 20th, 2023. It feels like March has absolutely blown by. And there's been just news nonstop. We come into even more news here this morning, which of course we'll go over, but just a lot going on right now. As we continue on with this banking crisis. But as always, we'll keep you up to date with what we have going on, as well as how you should be thinking about it, processing and breaking it down in order to remain consistently profitable here, no matter how crazy things get. So, like I said, this is our daily session where we go over all the important news and notes, and there's been a ton of them over the course of the past few days. And on Monday, we have our Deluxe pre-market rundown where we go over the week ahead, as well as our Monday specific news. So, let's go ahead and get us kicked off here with the week ahead. And as always, whether you're watching this live or watching this via replay, make sure you drop a one in the chat, signifying your intention to get 1% better by the end of this session. If my camera can zoom in, maybe get 1% better now. Autofocus, that would be great. But regardless, we're going to go ahead and dive in. So we're starting off with the week ahead. So the market anticipates the Fed will hike rates 25 basis points this week at a crucial two-day meeting that has investors on edge. Nike is expected to post its fiscal third quarter update, and NVIDIA will present its latest achievements in AI this week. And analysts say the mega trend is becoming harder to ignore. So let's see. It gave me, I guess maybe it might just be a very, very short week ahead, or this wasn't the full. Let's see if I can get the full newsletter going. There we go. Awesome. 19th. Yes. Okay, cool. So the headliner event will be a crucial two-day meeting. The Federal Reserve's policymaking committee with some investors on a razor's edge over the potential for an unexpectedly hawkish tilt. At the time of publication, futures trading implies a 74.5% probability of a 25 basis point rate hike by the Fed and a 25.5% chance of no hike at all. The odds for a 50 basis point hike are now effectively off the table after being a betting favorite just a few weeks ago. Opinion is divided on the tactics that the central bank should take given the recent events. Bank of America forecasts the target range will be raised appropriately by the Fed by 25 points to 4.75% to 5%, with the short-term loans offered through the bank term funding program seen as an effective backstop to more banking fallout. However, Moody's analyst Mark Zondi is firm that the Fed should not tighten policy due to higher recession risks. If they raise rates, that qualifies as a mistake, and I would call it an egregious mistake, he warned. Outside of the Fed drama, economic reports due to pouring in include due to pouring in. I feel like that was just a typo. But outside of the Fed drama, economic reports maybe due to pour in include the existing home sales update on March 20th, which is today, the new home sales numbers on March 23rd, the durable goods orders report on March 24th. And then the corporate calendar features one of the biggest events of the year for NVIDIA. The chipmakers GTC conference will be closely watched across the tech sector with some discussion on AI chips anticipated. So let's see, we just had my window refresh, took me to the bottom. All right, we're back to the top. Yes, so some discussion during NVIDIA's GTC conference on AI chips. People are anticipating that. Nike will also report earnings next week with investors looking to get a beat on how demand and inventory trends are holding up for the Dow 30 stock. In terms of earnings, we got Foot Locker today, Nike tomorrow, GameStop tomorrow, 10 Cent Music tomorrow as well. Wednesday, Petco, Chewy. Those are really kind of the only important names out of there, or at least readily recognized names. Then on Thursday, we've got General Mills, ticker GIS, Friday Express, ticker EXPR. Let's see, any more of this information important? So Santa Clara based NVIDIA, a little bit more on its GTC conference. They're going to hold that from March 20th through the 23rd. CEO Jensen Huang will deliver the opening keynote. The four-day event is expected to cover NVIDIA's latest investments in generative AI, the metaverse, large language models, robotics, cloud computing, and more. Just in front of GTC, Morgan Stanley upgraded the GPU maker overnight, with the investment firm noting the artificial intelligence megatrend has become too much to ignore Analyst Joseph Moore noted that the challenges in gaming and the data center have largely played out, but the development of generative and generational AI will overshadow any other trends. The stock will continue to be hard to ignore in an otherwise challenging semiconductor environment, he previewed. So that's really kind of the most important out of the week ahead. We've got, kind of an earnings preview with Nike. They're expected to report revenue of 11.44 billion and earnings per share of 54 cents with its fiscal Q3 earnings release on March 21st. Wall Street analysts have been incrementally more bullish on Nike ahead of the earnings release, including both UBS and Morgan Stanley. UBS thinks Nike can clear the market's bar, even with the sentiment positive. Nike is said to have strong brand momentum and consumers globally in an improved inventory position. So it looks like people are bullish on Nike going into their earnings this week. We'll see what ends up coming about of that. But overall, that looks like really the main takeaways for the week ahead. So now we can dive into our more Monday specific news here that we got going on. So let's see. And I know I didn't throw it up on the Instagram story. So I feel like a lot of people struggle to make their way in here when I don't throw it up on the story. So maybe I'll take a quick intermission to take the time to do that. For all my people that show up here, make your way here, I'm glad you could find your way here. We're in the same spot each and every morning, but I do understand that sometimes it can be tough. If people don't know how to use YouTube. I don't know why I want to call it YouTube. Don't know how to use YouTube, et cetera, et cetera. So I'll go throw that on the Instagram story to make sure everybody knows where we're at. And then we can kind of continue to keep things pushing. But we got, more news, another one with Credit Suisse getting bought out. So I'm pretty sure that that will be one of our big headlines that we talk about here this morning. Is it's just like DJ Khaled, another one in terms of these banks. And to be honest, especially after talking to a friend over the weekend, like, this is not going to be a kind of one and done type thing. Like, this is something that we could be struggling with for a bit. And I think that this intensely changes the dynamic of what we expect out of markets this year. And really how you have to operate in markets this year. So I think, this isn't the last, right? Unfortunately, and this is from a friend who works in banking. Like, he's at a bank where he's, in a sector that there's a little bit less contagion risk, but still, there's a lot happening. And he was talking about how he was in meetings with, the team from Silicon Valley Bank literally 2.5 weeks ago, like right before the collapse, and they had no idea, and these aren't interns, but at the same token, they're not top brass, they're not executives. But yeah, there were no signs, as far as they were concerned, that anything like this was going down. So it's really tough in that, a lot of this information is concentrated at the top. They're not letting anybody else know. And it's just so sudden where, boom, out of nowhere, we have this contagion that just continues to spread. Let's see here for our Deluxe Premarket rundown at the link below. And I'll add in, let me go to YouTube, get the link, paste that, and we'll be ready to go. Let's go back here. Share, copy link, awesome. And boom, we're in business. Now that's over there on the Instagram story for anybody who doesn't know. For anybody who is here, obviously you made your way over here, but if you come to my YouTube channel during the morning, right, you'll see that I'm going live, so you don't have to follow that link. For anybody who might be watching this back via replay right after coming in late, if you just go to my YouTube channel every morning, you'll see this live comes up, and that way you don't have to worry about the Instagram story, because again, it takes me longer to get set up for this than it does on Instagram. So sometimes, this won't end up getting posted to my story. Just know this is where we're at. This is where to show up, and you'll be all good. Now, getting back into, this crisis and these takeovers that are happening, another wild weekend has seen regulators attempt to stave off a banking crisis that's quickly spreading across global markets. Again, this is not like singular, like just the U.S. This is global markets. It was Credit Suisse's European arm that caused the issues that first started, right? That first precipitated this fear. And since then, it's spread to all of Credit Suisse. So, in an emergency deal brokered by Swiss authorities, UBS, ticker UBS, agreed to scoop up longtime rival Credit Suisse, ticker CS, for 3.25 billion, which was less than half of the latter's market valuation at the close of trading day on Friday. That is absolutely insane. We are getting huge banks, multinational banks getting acquired for half of their value from less than a week ago. Like, that is insane to think about. These are absolutely insane, unprecedented times where you could have like banks that, this is like in terms of 2 weeks ago, you got people that are making six-figure salaries, right? Seven-figure bonuses. And in less than a week, they are out of jobs, right? It's just, I can't even imagine. Like, it's tough to even wrap your head around. But this is, imagine your biggest competitor out of nowhere is just crippled, and you end up acquiring them really without any type of heads up or anything. It's just it's absolutely mind boggling. So without a deal, Credit Suisse would have likely collapsed this week, spreading further financial contagion that began in the U.S. with the implosion of Silvergate Capital, ticker SI, Silicon Valley Bank, ticker SIVB, and Signature Bank, ticker SBNY. First Republic Bank, ticker FRC, is also facing trouble with additional cuts to its ratings. And that's the things that once fear sets in, it's like, oh, fear sets in because of one isolated event. And then you have, all these other analysts and these banks that come in, they say, oh, this bank sucks, we're downgrading it. What happens? When something gets downgraded, it sells off even harder. Once you start selling off, what do? You hit people stop losses. So the selling cascades, right? And suddenly it only takes a few days, right? 1 to 2 days nowadays for literally multi-billion-dollar banks to collapse, right? And that's the power of fear. And that's why it's, again, so important to recognize when we talk about markets, we talk about stocks, when we're talking about these things, we're talking about sentiment, right? Sentiment is what we are discussing. It's not the actual, value of these things. When you look at Credit Suisse, right? Credit Suisse was acquired for half of what it was valued at only a few days ago. Why was that the case? Because value is all based on sentiment, right? It's based on how much do I see you as being worth, right? Not how much you're actually worth. If no one wants to buy you, you're not worth anything, right? And I think that's what's really important, is that sentiment shapes it. So when we think about, markets and how markets move, it's recognizing it does not matter. Like, if they did this many, billions in transactions last year, da da da. If no one trusts you, then no one trusts you, right? And I think that once you make that realization, you can start getting away from trading based on personal conviction and get into trading based off of what the charts are telling you, right? And what is happening in terms of news and things like that. Because people can look and say, oh, like, Credit Suisse should still be fine. They still have this much on hand. And I'm not saying that I know anything about their books, because I don't. But just in general, even with you, when you do, right, it's kind of smart people get that smart people confirmation bias where they're like, because of all this research that I did, like, this has to be correct. It doesn't, right? At this day and age, it does not matter if you're the smartest person in the world. If no one trusts you, you have no use, right? You have no use. You have no value. So it's the same thing with Credit Suisse here and with these banks. And that's why it's such a tough spot to be in, because, again, if people don't trust you, you have no value. These banks, without any trust being there is no value. You see crypto, Bitcoin breaking over a level that it hasn't done since June of last year, right? You see, kind of Ethereum, same thing, where people are scared of the banking sector. Crypto maxis have been telling people, forever that this was going to happen, and it happens, and suddenly people were like, I need to put my money somewhere where I'll have access to it. So you see, crypto and in gold, right, and these safe havens kind of taking off. Gold is something that we can look at again this week. I know last week it was one of those things where there were tons of things happening, tons of things breaking out. So initially missed that breakout there on gold, but we can check back in this week with what we have going on, because there was still some prime entrance areas last week. It's just tough sometimes with gold, because of how much heavy metals and metals in general just end up being manipulated. So it's tough, because it can leave kind of an annoying taste in your mouth when it comes to dealing with gold. But it definitely provided with a nice, beautiful daily bullish pattern last week, and one that I'll continue to check on this week. We'll see how kind of gold moves and these metals move. But there's a lot of stuff going on this week, and it just honestly further underscores the fact that unless you're kind of trading during the day, it's tough to take swings, right? It's tough to take swing trades on things other than things that are doing positive because of this banking crisis, right? So when you look at like crypto, right, and you look at our coin swings that absolutely killed it last week, those are fine to swing because coin, right, gold, right, these are some things that kind of are positively impacted by all this banking news. But otherwise, it's tough because every morning you can wake up and there's a new bank that's failed and equities are down because of it. So it just underscores the fact that you're still in that kind of like playing light, see profit, take profit. If you have profit during the day, take it if it's great profit, because swinging is just going to be very, very risky. And anything swinging in this bank sector, especially, is going to be very, very risky. Now, let's see here. What's in it for UBS, right? Why the heck do they want to acquire Credit Suisse, anyways? By swallowing Credit Suisse, the bank has the opportunity to scale up materially and instantaneously, bringing on significant additional AUM and AUS, wrote Seeking Alpha contributor IP Banking Research, predicting the deal ahead of the announcement and calling it a shotgun wedding. Operational leverage and significant synergies can be derived. That can be derived would be exceptionally high, and UBS would likely only need to pay a token amount, he continued. One of the biggest factors for UBS is also the fact that the Swiss government now has its back after it managed to negotiate the deal of the century. Um, so it looks like UBS, overall is just getting a lot of good faith. Like it's always nice to be in good and have the government kind of owe you one because the Swiss government came in to back Credit Suisse's, one of their European arms, and it wasn't enough. So they needed somebody to fully, back Credit Suisse, and UBS did that. So it's nice to have the government in your pocket, right? Sad but true that is the world that we live in, right? Where private companies and banks and whatnot can have the government in their pocket. Speaking of which, I saw Warren Buffett meeting with Biden. That'll probably be in here also. Where at this point, Buffett has come in to help out banks before. He might have to come in to bail out banks again, which is just, again, crazy to think about. But market sentiment took a turn for the better following the emergency rescue, which would limit contagion through the financial system, only to drop lower as things were fully digested. With big losses on tap for shareholders and bondholders, the Fed, ECB, and other major central banks took coordinated action to ensure dollar liquidity, while the Swiss National Bank promised access to liquidity facilities for both banks involved in the transaction. In pre-market trading, UBS and Credit Suisse opened down 11% and 59% respectively, with regulator FINMA adding that about $17 billion worth of Credit Suisse's risky AT1 bonds will become worthless to guarantee that private investors help bear some of the costs. So overall, right, no real beneficiaries in terms of like price action from this, unless you were shorting Credit Suisse and you were shorting UBS. UBS, whenever you're a company that is acquiring another company, typically your stock goes down because you had to overpay, even though they did severely get it. Like they got a great deal, right? They paid half of what Credit Suisse was actually worth. So they did get a great deal, but overall you're taking on, a defunct bank that no one really has faith in. So that kind of weighs on them as well. So UBS down 11% here at open, and then or as we approach open, it looks like Credit Suisse, at least as of earlier, was down 59%. So in terms of outlook, market participants are hoping the game of whack-a-mole in the latest banking crisis will end well, but there are deeper considerations at play in terms of the health of the overall economy. While moves by the government may limit wider contagion among financial institutions, tightening standards among lenders, greater scrutiny, and raising capital ratios all have the potential to slow economic activity. Combined with higher interest rates from the Federal Reserve, it can all but guarantee a coming recession. What other options does the central bank have as it looks to vanquish inflation? And that's why, like, this week's press conference from Powell on Wednesday is going to be so important because so many factors have arisen since the last time that the central bank met. I mean, they just started, essentially turning the money printer back on again. And I'll talk about that like in a reel probably this week. But yeah, they just started turning the money printer back on again. They had to, and people can come and say it is quantitative easing. It's not quantitative easing. If the Fed is executing actions that result in money being pumped into the economy, it's easing, right? It's easing. It's them like putting the bumpers back up, and that happened last week where the Fed essentially kind of turned things back on and. They were like, hey, we tried, but at this point, the market is on the verge of collapse, right? We have the economy that is on the verge of collapse. We got to do something, right? So they injected some liquidity into markets last week to put it as simply as possible. It's not going to all these different things where people are like, Adam, I don't know what that means. I don't know what that means. Essentially they turned the money printer off. They started raising interest rates. Now this is them turning the money printer back on, right? Because the market needs money. The economy needs money at this point. So, and that's why it's tough to just say, oh, I'm just going to go bearish on the market and just short it, because it's like there are also a lot of different factors that are happening that can make us like rocket at any time, right? If Powell goes, let's say he doesn't hike by 25 basis points, he's like, I'm actually dropping interest rates this week, we could skyrocket, right? So it's just like there's so many balls in the air where you can't even try to predict because we don't know, right? We don't know. And if you do try to predict, you take a heavy stance based on that, that's on you and your risk tolerance. If you're fine with that, that's cool. But at the end of the day, there's a bunch of different things that could happen, right? To the point where we can't even just say, all right, we're just going to go straight down, because we won't go straight down. There's too many things going on and too many question marks. So we'll see what the Fed does, going into things this week. If they hike by 25 basis points, and that's in line with exactly what was expected. But in terms of like Powell's outlook on this banking crisis and everything that's going on, people are going to be all ears for that, basically saying, will you be willing to step in and support the economy if more banks, start to crash and this turns into a full-blown issue? In terms of outlook, market participants are hoping will end well, blah, blah, blah. We saw that. So, banking crisis. In light of the current banking crisis, what will the Fed do at this week's policy meeting? This is just them asking if you want to take a survey. So, yes, this Buffett, right? Buffett getting involved. Billionaire investor Warren Buffett has reportedly been in contact with senior officials in the Biden administration in recent days regarding the regional banking crisis. Note that the Oracle of Omaha has been a savior to the banking sector in the past. The chairman of Berkshire Hathaway invested $5 billion in Bank of America, ticker BAC, in 2011 as he tried to bolster the bank due to its losses tied to subprime mortgages, and also came to the aid of Goldman Sachs in 2008, ticker GS. Elsewhere, a group representing mid-sized U.S. banks sent a letter to the FDIC asking the agency to ensure all bank deposits for the next 2 years as debate takes place over the current cap of $250,000. So we might see the Oracle of Omaha get involved. I don't know, but at this point, man, things are just looking real dicey, right? You've got all the big players; they're scrambling, trying to figure out what is going on, how they can execute, what they can do to help, because people realize, the ultimate impact of fear. But at the same time, like I understand all this is fear is going on, all these things are happening. This is also an amazingly opportune time, right? We've got Wealthy Revolution live conference happening this week, which I'm extremely ecstatic about, right? We've got all these different things that are happening. We've got AI, with ChatGPT and Copy AI. We have all these different things that are at the same time as all this scary stuff is happening. We have all these things that could serve to bolster how effective we are, right? How much value we bring to the world. Like, I believe that while the world will present us with so much adversity, it also will always give you the tools to overcome the adversity at the same time, right? So I feel like that is just one of those areas that we're at where it's like, man, there's a lot of crazy crap going down in a bad way, but there's also a lot of crazy crap going down in a good way where, you can go on and just do some amazing things, right? Just bolster your productivity, be so much more efficient, so much more effective, and the tool, right, the tools are there. So it's like, just because things are fearful or things are scary does not mean that there's not an opportunity to change your life in a positive way. I want to make sure that I'm constantly underscoring that, because you can hear all this fearful news and banks, crashing and all this other stuff, and you're like, I don't know what to do, I feel so scared. Listen, the tools are in place to save you, right? It's like when you're hungry. Babies get hungry and they cry. Why? Because they have no idea of what ways to feed themselves. Their parents feed them, right? So it's the same thing when your parents aren't there and you're hungry, right? You just cry and you cry and you're scared. But when you know ways to feed yourself, you're like, yes, I'm hungry, but I also have the means to rectify that situation. That's how you need to be looking at it, right? Because at the end of the day, like, we're not doomed. In 2023, there are way too many resources available for you to ever not have a way to make money, or a way to provide, or a way to do your job 20 times better than how you're doing it now, right? There's so much stuff happening each and every day that one person can do the job of 10 people easily. All you need is the right tools and how to use them. So I want to make sure I'm underscoring the fact that, yes, while there is always doom and gloom in the world, there is also positive, radiant beams of sunlight, right? That really, really show how we can bridge the gap between where we are and where we see ourselves being, right? How we can accomplish the amazing things we want to accomplish. The tools are literally every day coming out in order to do that. And I can't wait to talk about some of those this weekend as we dive into that conference. But I just want to say that, right? Because you can get all doom and gloom and people just think, oh, it's over, and, they get sad. And that is not the case at all, right? There is always a way out. There's always an exit. So you just got to keep your eyes open, right? And keep your mindset finely tuned, because your mindset is the lens through which you perceive opportunity. If your mindset is, not good, it's not there, then you can't see all the opportunities that are available, right? There's plenty of stuff that people are doing amazing things with, but you got to make sure that you're feeding your knowledge base, putting yourself in environments that allow you to lift your head high enough to see opportunity. That's huge, right? And if you want to be on that same wave, throw a five in the chat. If you want to be making sure that you're taking advantage of all the opportunities that 2023 is providing, throw a five in the chat, right? You need to make sure that you're actively declaring this to yourself each and every day. I'm not going to get left behind. I'm not going to, not be aware of what's going on. I'm not going to figure out ways to make myself even more valuable in this environment, no matter what happens. You got to be committed to that. And if you are, promise the universe will double down on that, right? It'll return that back to you. In terms of grain deals here, back to talking about grains in Ukraine, an agreement that allows Ukraine to export grains from Black Sea ports has been renewed beyond its March 18th deadline, which is great. Don't need to worry about, that's not something that needs to be added onto the plate at this point. Is that we get back into this food security crisis with Ukraine. While Ukraine officials said that the pact was renewed for another 120 days, a spokesperson for Russia's foreign ministry announced it agreed to a 60-day extension after warning that a lengthier extension would depend on the removal of some Western sanctions. The Black Sea Grain Agreement has allowed more than 25 million tons of crop shipments from Ukraine since it was first brokered by the UN in Turkey last July. Before its renewal, Chicago wheat futures scored their first weekly gain in five. Chinese leader Xi Jinping also arrived in Moscow today for a 3-day visit amid fresh ground offensive by Russian forces in a grinding war of attrition. Again, we see another piece of writing on the wall. China and Russia like this right now, right? Meeting multiple times in person. Xi doesn't meet anyone in person, right? And he has met Putin multiple times over the course of the past year, multiple times in person. This is not coincidence, right? You cannot write this off. At this point, you again have to look at the writing that's on the wall. You got China and Russia very, very tight in cahoots here. China likely selling Russia weapons, and increasing tensions that we have going on with China. So it's just another thing where you just gotta keep your, make sure you're keeping your ear to the streets and watching things like this. He doesn't go on tours, right? Xi is not one to travel a lot. So when he goes somewhere and he goes in person, it means a lot. It means a great deal. And I don't think it's a coincidence that he's going in the middle of this latest round of, fresh offensives when it comes to the Russia-Ukraine war. Now, in terms of winners and losers here, the banking crisis has seen some interesting winners and losers, and more will be revealed or change as new developments play out. And I think that's what's so important, right? You could see kind of crypto running, gold running as a result of this bank crisis, but then something happens, right? Let's say that Powell's like, you know what, we're not raising interest rates by 25 basis points. Actually, we're dropping them by 25 basis points. Equities would absolutely skyrocket. So I think again, it's recognizing that yes, like for now, these are the circumstances, but those circumstances can change, right? Those circumstances can change. You just got to make sure you're here for the pre-market rundowns, right? You're paying attention to what's going on in the world around you, and recognizing that there's risk involved, right? There is risk involved, and everything that's doing well today might not be doing well tomorrow, vice versa. But as of right now, in terms of winners and losers, while equities are still making up their mind, traders have been fleeing financial stocks to snap up safe haven assets like bonds, gold, and even crypto. The yellow metal has rocketed to over $2,000 an ounce, while Bitcoin breached the 28K level for the first time since June of 2022. On the other side of the fence, WTI crude oil was just fell to $65 per barrel after just closing out its worst weekly loss in nearly 3 years. So we've got, right, in terms of winners and losers, oil struggling on the back of this, right? Which again, you can try to make all these different suppositions or theories as to why that is the case. All you need to know is that's the case. We see oil struggling in the back of the banking crisis. Then we see, crypto and gold that are pushing on the back of it, right? So those are kind of, and then amongst those, there are a number of other winners and losers, even within the normal stock market, right? We talked about coin. Coin paid us crazy on Friday, right? Coin was a beautiful swing. We talked about that, right? So we were on top of this. There are ways to leverage sentiment in the crypto sector in the stock market. There are, and it pays handsomely. And one of the ways is through coin, right? We talked about coin, Riot, and Mara all last week. All three of those are up, right? So in terms of today's markets, kind of mixed bag across the board. It looks like, are we still looking to open? Let's see here. Looks like we might green actually after like crazy weekend chop. We went up, we went down, and now it looks like we actually might open green here. It depends, but looks like we're slightly above where we were when this came out. But I'm still gonna talk about these percentages. So in Asia, pretty much red across the board in Asia, Japan down 1.4%, Hong Kong down 2.7, China down 0.5, India down 0.6. The footy in London up 0.3, Paris up 0.8, Frankfurt up 0.5%. The Dow was flat, now slightly green. S&P was up 0.1, now it's up a little bit more. NASDAQ up 0.1. Crude oil down 1.5%. Gold up 1.4%. Bitcoin up 4.5% to 28,346. What else is happening? We'll finish with our rapid fire bullet point rundown here. So, Fed, Treasury support, Swiss authorities moves on financial stability. New York Community Bank Corp unit buys Signature Bank deposit. So, you've got, again, all these banks coming to these other banks' aids. Boeing, ticker BA, to make 184 Apaches for U.S. Army and global customers. So, Boeing, Lockheed Martin, right? At this point, again, knock on wood, not speaking into existence, but war seems to be all but certain. And to be honest, war is great for markets. It's like it sucks. The unfortunate reality of being alive and being a human is that there are like a lot of perplexing things that happen where it's like negative things have to be introduced in order to make positive things occur. And unfortunately, war is one of those things that's great for business, right? Economies always skyrocket during war because there's production. Everyone is unified, right? You're not worried about how high food prices are because we're literally fighting a war where people are fighting for their lives, right? So it's kind of like, unfortunately, war is that like cohesion that can save a crumbling economy. And it just looks like increasingly that is where we're headed. And I feel like that's why Buffett isn't really caring much that, oil is going down and he's still sinking money into it, because if you expect war, right, the oil is going to be heavily utilized in order to fund that, in order to fuel it. You see Boeing, right, making almost 200 Apaches for the U.S. Army and global customers, meaning the U.S. is not the only person buying, right? So Boeing, Lockheed Martin, Raytheon, all of those defense tickers are ones to keep an eye on here as we start to see, these tensions continue to increase. Which, again, does anybody want it to happen? No, but also if it does happen, I'm not going to sit here and pretend. In terms of, let's see, calling for protests, Trump says he expects to be arrested on Tuesday. That also, like, imagine that not being the top headline. Like, that's how crazy of times that we're in. A former president is about to get arrested, and that was in the bullet point rundown to end this session. Like, again, that's just, if you can't fully appreciate it, like literally a president said he's going to get arrested, and that is a footnote in the notes that we're going over in terms of major news. Like, I don't think you can get to more volatile times than what we're living through now, which again just makes it an even better case study to when you move forward, right? If you trade through this, like this is the toughest time that you'll be involved in markets, right? These are the toughest circumstances to be involved in. It's happening right now. Learn, right? Even if you're not trading real money, paper trade through it, learn through it, snap up these experiences. Why? Because this is the minority of times, right? The majority of times are not like this. This is where things get the worst, right? This is where you're learning to drive and it's on, a snowstorm in the middle of Iceland, right? You can't see all that stuff. If you can get through this, you can get through anything, right? So appreciate it for what it is. Appreciate the adversity as the building blocks for your future success. Because again, you don't see times like this very often, but if you learn how to navigate them, everything else is cake, right? Everything else is an absolute cakewalk. So take advantage of this. Don't shy away from it. Don't be scared of it. Be respectful of it, right? Recognize it for what it is, but also recognize that it can teach you a lot of great things that, help you kind of make it easy when markets go back to being normal. In terms of France, Macron's leadership at risk as tensions grow over French pensions. Pfizer, ticker PFE, Pfizer CEO Bourla pockets $33 million for 2022 after 36% pay hike. Wow. Dang, well, Big Pharma, what do you expect? TikTok's moment of truth is coming and fallout could spread far and wide. Again, that is something that has been positively impacting both Meta and Snap, right? In the wake of TikTok possibly being banned, Meta and Snap have been doing really well. I'd say well comparatively. Microsoft offers remedies in EU deal review of Activision. Silicon Valley Bank called a hedge fund in drag. Housing market slump to worsen on mortgage rate volatility. And that's from Fitch Ratings. So that'll wrap us up here for our pre-market rundown for March 20th, 2023. I got to see what my schedule is looking like for the rest of this week. I doubt I'll be doing the pre-market rundown during the conference because we just directly dive into things. So we'll see if I'll still be available to do this on Thursday or Friday. Monday, Tuesday, Wednesday, I'll still be good. But preparing for that, getting ready for that, absolutely ecstatic about that. It's my favorite week of the year, so hopefully I'll see a lot of you amazing people in person. I know I'll see some of you there in person, but I'm extremely excited and ecstatic for that. I kind of want to get, I don't know, we'll see if we can get something going from I get some people that are there, that show up. But other than that, man, just excited, grateful for another week. There's a lot of crazy stuff going on in the world, but that's why communities like this one are so important. We're not here to sit here and focus on the negatives. We're here to focus on the positives, how to navigate it. And that's what you want. You're not alone when you have a community like this one. I think that's what's so important to recognize, that humans need community. We need people that we can kind of coexist with in order to survive. And that's exactly what we are, right? We are the life raft in the middle of all this craziness is going on, and I wouldn't rather be anywhere else. So appreciate you guys. Love being a part of this community. As always, if you got any value from this session, just show love, right? Show love to the YouTube, show love to the Instagram, show love to the TikTok. Even though it might get banned, still show love on the TikTok, right? And I appreciate it, and I'll continue showing up for you guys, right? So thanks for showing up for yourself, investing in yourself. You got 1% better. You can cross that off the list for today. Have a great rest of the day. I'll see you back here tomorrow morning for our next pre-market rundown session. Have a good one.